Hello, traders. It is Monday morning, April 11th. We're about 2.5 hours into trading. Let's take a look at my most recent pick. It came out Friday before the open, an hour before the open. I suggested TGT as the long of the day. Yes, it opened here. You can see stock currently trading about at that level, but there are plenty of opportunities to take gains on TGT. I still like it, but the market is very soft. So you could look at this pick and say, what the heck? How is this even a good pick? Well, if you overlay the S&P, you can see that the S&P 500 has been down, down, down since that pick came out. So it has held its own. That is the beauty of trading relative strength. Ooh, hey, got the market wrong here. We're looking for a market to go higher. Market's all the way down here. The stock is right where we bought it. That is the cushion. That is the crux of the trading edge that we use. So now that you've seen that the market is heading south, you get out of something like TGT. If you had bought S&P futures in here, held them overnight on the notion that the market was going to go higher, you would have your head handed to you right now. But because you're in the right stock, you've been able to mitigate losses and even break even. And now you can shift your focus to the short side, which is where the action's at. So, yes, an excellent trade. Opportunity to make money in it. Could have scratched it. No harm, no foul. Wrong side of the market. Now all of a sudden, conditions are becoming more clear, which I have also been stating that the market could go either way. Let's take a look at the chart on the S&P 500. Let's get our market bearings right now. So here is the daily chart of the S&P 500. What do we got shaping up here? Well, we had this high right here, and since that high, the market has drifted lower. It looked like we might have a chance bouncing off of a key support level, that 200-day moving average, with a bullish hammer right in here above the 200-day moving average. So we rally through the 100-day. Okay, we come back and test it. Now we start really selling off, but we find support above the 200-day moving average with a bullish hammer. That is a pretty nice little sign of support, especially after a nice run like that. However, here's the problem. We needed to see follow through to that bullish hammer, which we got, and then the next move needed to be even higher because it would take out that downward sloping trend line. So as we tried to do that, look what happened. Bearish hammer, we closed below the 100-day moving average. Not good. That's a bearish sign. That's a sign that sellers are taking profits. Okay, well, we still have the 200-day moving average for support. Well, the 200-day moving average has failed, and you can see how it's a magnet. We've been hovering around it, and now all of a sudden we're testing the 50-day moving average. So this is a very important point that I want to make right now. I'm going to show you a swing trade. We do not take this swing trade unless the S&P 500, the SPY, is closing below the 50-day moving average. That's the next support level today, Monday, April 11th. So you would check the market 10 minutes before the close. You'd see if we're below it. If we are clearly below it and clearly going to close below the 50-day moving average, then and only then would you take the trade that I'm going to show you today. So we're going to be looking at the short side. We also had a key horizontal support level at SPY 444 from March 23rd right there that was violated today. I'd mentioned that to members in my pre-open market comments. And there you can see we spent time at 444. Needed to make sure, and that was a horizontal support level that we can clearly see on an H2 basis. There's your support right there, horizontal support line. That support held for a little bit, and then we took it out. And now that we're clearly below it, the market has a clear path lower. We also have a bearish 1OP cross pending pretty soon. There's a bullish cross right here. What did the market do during this bullish cycle? So remember, when you've got it selling off below zero, cross above, that would be a bullish cycle. Well, during this bullish cycle, the market has done Nothing. Zero. Normally we would be expecting it to run higher. When it doesn't, that indicates selling pressure, and that tells me that this next bearish cross is going to be a good one, and it's likely to take out the low of the day. So when you're drawing your trend lines, make sure that the first thing that you draw any trend lines on is the S&P 500. Draw them on a weekly basis, draw them on a daily basis, and then drill down to some other time frames so that you can see exactly where those levels come into play. So that's what I'm going to do right now. I'll spend a few minutes on that, and we can take a look on a daily chart. What do we got working here? Well, we've got this trend line primarily working. Yes, you could draw all sorts of trend lines up in here. There's nothing substantial enough for me to anchor a point to draw one up, but that might mean that I need to go into an H2 time frame, a little bit shorter time frame, to see if that might lend some clarity. And it does, because now you can see all of a sudden, hey, there's a downward sloping trading channel that's currently taking place. So let's draw those lines in. We'll start at the high of the day here, or excuse me, at the very highest point on that 2-hour chart. And now we'll come in and we'll start drawing our lower trend line. Well, this one actually is expanding, which would be a sign of increased volatility. And we can also draw another trend line from here on a 2-hour basis that is kind of a nested channel right here within a trading channel. In any event, there's clearly selling pressure that's taking place right now. We've got this horizontal support level that's breached, so let's draw that in very quickly. And when you start adding everything up, you can see that clearly there is selling pressure right now. This is not a market where you want to be out buying. And we didn't know that this was going to hold true until just recently. So you've got horizontal support breached, you've got a downward sloping trend line. Here you have a downward sloping channel, you've got a nested downward sloping channel. Market looks like it's going to drift lower. Plus we have options expiration week, monthly options expiration week. Okay, in the last year, 9 of those have been bearish. Last month was the exception. So we've got a number of things that are looking a little bearish. We have a bearish cross right here on 10p. Hey, here's a nice feature that I added to Option Stalker. We're going to click Market Signals. It's going to show us market signals for S&P 500 and QQQ across all time frames. Red, 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 all the way across. So we need to be favoring the short side right now. When these signals are generated, they're great for each individual time frame, but now we have confirmation across all time frames, and that makes them even stronger. So let's go find a stock on the short side that we like. I'm going to go in, I'm going to look at my short lists, go into my bearish lists, heavy selling. That's an excellent list that we could be looking at. I've already knocked through this, and I do like Microsoft on the short side, but Microsoft can be a choppy stock. Why do I like it on the short side? Go into the daily chart, you can see upward sloping trend line breached, was not able to get through the 100-day, easily fell through the 200-day. Now it's below the 50-day upward sloping trend line, breached to the downside. Yes, Microsoft is weak. In fact, Apple, Microsoft, Facebook, Google, Amazon, all weak. All your major tech stocks are weak. Your mega cap stocks are weak. It's going to be very hard for the market to rally without them. So I am looking for lower prices. I'm going to continue to go into my searches. I'm going to go right down to bear run. And I can see here that one of the stocks that I really like on the short side has all of a sudden disappeared from the list. I'm going to see if it's in any other list. And I don't see it right now, but we're going to go right to it because it was just on there a minute ago. IBM caught my eye. And here's why I like it. If we draw an upward sloping trend line here, we can see that it passes through many different points. So right there, we've got it going through 1, 2, 3 points from start to finish. got above the 200-day moving average. Now it hasn't been able to stay above that. It's also below the 100-day moving average, also below the 50-day moving average. You do also have a death cross right here, 50-day moving average below the 200-day moving average, both heading south. So there are plenty of reasons to like IBM on the short side. Take a look at the earnings date, which comes up next week. So we've got earnings on the 19th. I think there's an opportunity for us to be short this stock. It does tend to move pretty slowly, as you can see, but once the trend is set, it tends to continue in that direction. So as far as IBM is concerned, I like it on the short side. You would only short this if the SPY closes below the 50-day moving average today. And I think that you can look for a move probably down into the $124 level or so in the next few days. So lots of opportunities, perhaps a short-term bearish put spread would work. Put debit spread, that could work out well for you. These option implied volatilities tend to be pretty cheap because IBM does not make big moves. So you should be able to get slightly in the money, at the money, and buy those options for fairly cheap. Right now, I don't like what I see in the market. This stock is breaking major technical support, uptrend line, major moving averages. Those are all conducive for it to go lower. And we also have 10SI bearish as well. Let's pop that up very quickly. You can see the orange line has continued to stay below zero. So I like IBM on the short side. Let's see what the day brings. See if that trade triggers with the 50-day moving average being breached today by the S&P 500. If it is, I think IBM is going to work for a nice little swing trade for a couple of days or so. I still feel that the market, it's very, very tough trading out there right now. Yes, this is a little bit of a bearish look to it, but not overwhelmingly so. And we've seen on some of these drops that we can get these violent snapback rallies. Earnings season tends to attract buyers. So for this week, I would say things still look pretty bearish to me, but probably by the end of the week, when earnings really start to unfold next week, we should start to see some support. We also had that monthly options expiration, which was a little bit of a bearish bias. And tomorrow we've got CPI coming out. They're looking for a 1.2% increase in CPI. I've never seen a number like that. I can't help but think that that's going to weigh on the market if it comes to fruition. China released their PPI over the weekend, 8.3% year over year increase. That's going to put upward pressure on interest rates. So I think that's a stiff headwind that we've got to try and navigate right now. Thanks so much for watching. Please leave your comments. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.